Inflation has been talked about constantly for the past few years. And so I want to help you understand what is the impact of inflation on your retirement savings. Here are three things that I think about. First, it impacts your expected return or your rate of return. So your investments may earn 10%, but if inflation is at 5%, you're really only earning 5%, for example. The second thing that it impacts is your planned expenses in the future. So, whenever we're making financial plans, we want to make some assumptions about how much life is going to cost down the road. And so, inflation impacts what that cost will be because what a gallon of milk costs now is going to be different than what it costs 5, 10, 20, 30 years from now. And the third thing that it impacts is your ability to save. I have spoken with many clients over the past few years that the cost of living increasing so rapidly has impacted their ability to be able to contribute and to be able to save, to be able to maintain their lifestyle that they want. Now, hopefully, inflation doesn't last forever, but if it does, or if it continues at the rates it does have an impact on your financial plans and your retirement savings. And so, those are three things that I think about. Now, to expand upon that a little bit more, let's go into the first one, which is expected return. Whenever we are planning, making our financial plans, a lot of it is based on assumptions. We have to assume how things may work out in the future, and generally, whenever you're working with a financial planner, we want to model out not only one scenario but multiple scenarios as well, and inflation is a big part of that. Now, the Federal Reserve, which they control the monetary supply for our country, they have two mandates really, which is from Congress. So Congress appoints the Fed to basically be able to control the money supply within the United States of America. And so their two main mandates are price control, which is a big part of that is keeping inflation at bay, and then the second thing is unemployment at normal levels. And so the Fed can increase or decrease rates to control those two aspects. Now, whenever inflation is high, that impacts our rate of return because uh, if if inflation is high, let's say it's at 4%, that means that our money has to earn at least 4% for it to be the same value. So even though you might earn 4%, if the things that you're buying cost 4% more, it basically nets you out to a 0% return or 0% real return. So whenever we're making our projections on expected earnings, it's not only taking what has been the historical average of those returns, but it's as a historical average of those returns less projected inflation. And so you can use a lot of different metrics for that. You can look at the historic number, you can look at a projected number, all of that. But it does impact that projected return. So if you need a 6% rate of return to be able to hit your retirement goals, for example, that needs to be a 6% rate of return after inflation. And so you have to take into consideration inflation on that. The second thing, an impact of inflation is on your planned expenses moving forward. So let's say you're planning to retire 5 years from now. Let's say you work at Walt Disney World and you're planning to retire about 5 years, and you're looking at your expenses. And let's say your total expenses for the year are $100,000 a year. After taxes and all of that, right? You're spending $100,000 a year for traveling, for all the things that you want to do. $100,000 a year is not going to cover it 5 years from now. So we have to assume some sort of inflation up to get to what the expenses would be 5 years from now, for example. And so whenever we're looking at the projections and analysis, we want to assume some sort of rate of return for inflation. Maybe it's 2%. The Fed's preferred inflation rate is 2.5%. So they try to basically move the needle to stay at that average of 2.5% over time. But as we saw in 2021, 2022, 2023, inflation can spike really rapidly. And so we want to be cognizant of those impacts and try to plan for inflation's impact to our future expenses whenever we're planning for retirement. So we don't. It's not that we need $100,000. We might need more than that because we're adjusting for inflation. The third impact of inflation is our ability to save and the impact on our expenses currently. So if we've experienced 20% of price increases over the past 3 years, that's a significant amount of money for most of us. And that may impact our ability to save in the future. And so we have to really look at what our expenses are, look at where the money is going, and looking at what we're saving. And is that saving going to be able to be enough to keep up, or do we need to try to increase our savings? And every once in a while, sometimes I'll meet with clients there's I call them super savers. They're just naturally inclined to save, and sometimes it's dialing back savings a little bit, but for most of us, it's looking at not only those future projections, but also how has inflation impacted us, and being aware of those expenses, because sometimes, and a lot of times, it creeps, and so you're able to make the payments, but then you're noticing there's less and less each month in your checking account or savings account, and so that ends up being a huge impact on your ability to continue to save, because you may have to dial back savings just to be able to maintain lifestyle. So we want to keep an eye on what our expenses are, and the impact of inflation on those expenses over time. My name is Kyle Newell. I'm a fee-only financial advisor here in Winter Garden, which is just outside of the Orlando area, Central Florida. I'm able to meet with folks face-to-face, able to meet with folks across the country via Zoom. Of course, this is all just educational information. No specific advice here given. Talk with your own financial advisor, talk with your own tax advisor, talk with your own attorney before making these sort of decisions. And if you do have questions, you want to drop a comment, feel free to drop a comment. Happy to respond if I can. And go to the website, newellwm.com, if you'd like to reach out specifically on something. Again, newellwm.com. And I hope you found this valuable, and I hope you have a great day. Take care.